EPK Capital presents Daily Brief for 11 September 2025. Welcome to today's comprehensive market analysis, presented by EPK Capital. I'm your AI host, Rutvik, bringing you all the major developments that have shaped global financial markets over the past 24 hours. From record-breaking stock performances to crucial economic data releases and significant geopolitical developments, we'll cover everything investors need to know as we head into tomorrow's trading session. Let's start with the numbers that matter most, where the world's major indices finished trading on September 11, 2025. United States markets. The U.S. market continued its impressive run with mixed but generally positive results. The S&P 500 closed at 6,532.04 points, gaining 0.30% and notching another record high for the second consecutive day. The index has now climbed approximately 11% in 2025, demonstrating remarkable resilience amid ongoing macro uncertainties. The Nasdaq Composite also achieved a fresh record, closing at 21,186.06 with a modest 0.03% gain, marking its third consecutive record high close. However, the Dow Jones Industrial Average bucked the trend, declining 0.48% to close at 45,490.92 points, weighed down primarily by Apple's continued weakness following disappointing product announcements. Asian markets show strong performance. Japan led the charge in Asia, with the Nikkei 225 surging 1.22% to close at 44,372.50 points, setting a fresh record high as investors cheered the unexpected drop in U.S. producer prices. The Nikkei briefly touched 44,505 points during the session, representing a 1.52% gain and demonstrating strong momentum in Japanese equities. The Hang Seng in Hong Kong showed mixed signals, declining 0.43% to 26,088.39 after earlier gains, while mainland China's Shanghai Composite managed a modest 0.13% increase to 3,812.22. European markets mixed. European markets presented a mixed picture ahead of the crucial ECB interest rate decision. The FTSE 100 gained 0.46% to close at 9,267.54, while Germany's DAX managed just a 0.06% increase to 23,646.86. France's CAC 40 performed better with a 0.27% gain. Indian markets steady. The BSE Sensex in India closed at 81,425.15, up 0.40% on the day, while the Nifty 50 gained 0.36% to finish at 24,999.10, just shy of the psychologically important 25,000 level. Oracle's historic surge drives market momentum. The single biggest story driving markets yesterday was Oracle Corporation's absolutely stunning performance. The software giant's shares skyrocketed by an unprecedented 36% to 43%, marking the largest single-day percentage increase since 1992. This wasn't just any ordinary earnings beat. Oracle announced 4 multi-billion-dollar AI contracts with 3 distinct clients, with CEO Safra Catz describing the quarter as incredible. The company's market capitalization soared to approximately $950 billion, bringing it tantalizingly close to the trillion-dollar club. What makes this surge even more remarkable is that Oracle became the first U.S. company with a market cap of over $500 billion to rise more than 25% in a single trading session. The stock reached a peak of $345.49, and if these gains hold, Oracle's market value could increase by roughly $299 billion. Oracle's cloud infrastructure business is driving this explosive growth, with the company projecting revenues will surge 77% this fiscal year to $18 billion, then accelerate to $32 billion, $66 billion, $114 billion, and ultimately $144 billion over the next 4 years. Larry Ellison, Oracle's co-founder and chairman, saw his wealth increase by approximately $102 billion to around $395 billion due to his 41% ownership stake, positioning him closely behind Elon Musk in the race to be the world's richest individual. This Oracle surge had a ripple effect across the technology sector, with AI-related stocks experiencing broad gains. NVIDIA rose 3%, Broadcom jumped 10%, and advanced micro devices gained 24%. The Philadelphia Semiconductor Index advanced 2.3% to reach a new peak. Critical economic data releases shape Fed expectations. The economic data landscape over the past 24 hours has been dominated by inflation reports that could significantly influence the Federal Reserve's upcoming interest rate decision. Producer Price Index. Surprise. The U.S. Producer Price Index for August delivered a major surprise, falling 0.1% month-over-month versus expectations of a 0.3% increase. This represented the first decline since April and was well below consensus forecasts across the board. Core PPI, excluding food and energy, rose just 2.8% year-over-year, significantly below the expected 3.5% and down from July's 3.1% reading. This data suggests that producer-facing inflation is less sticky than previously thought, providing the Federal Reserve with additional ammunition for potential rate cuts. Consumer Price Index in focus. All eyes are now turning to today's Consumer Price Index release, scheduled for 8:30 a.m. Eastern Time on September 11th. Economists expect headline CPI to rise 0.3% monthly and 2.9% annually for August, up from July's 2.7% pace. The core CPI, excluding food and energy, is anticipated to remain at 3.1% annually. This data will be crucial in determining whether the Federal Reserve proceeds with a 25 basis point rate cut or considers a more aggressive 50 basis point reduction at next week's September 16-17 FOMC meeting. Current market pricing shows futures traders assigning roughly a 10% probability to a 50 basis point cut, up from 0 before recent weak employment data. However, most economists still expect a more measured 25 basis point reduction. European Central Bank decision looms. Today marks a critical day for European monetary policy as the European Central Bank announces its interest rate decision at 2 p.m. local time. The ECB is widely expected to hold its three key interest rates unchanged, marking a second consecutive pause in the rate-cutting cycle that began in June 2024. Current rates stand at: deposit facility rate, 2.00%; main refinancing rate, 2.15%; marginal lending facility, 2.40%. Eurozone inflation stood at 2.1% in August, perfectly aligned with the ECB's target and providing little urgency for immediate rate cuts. Market expectations have shifted significantly since mid-July, when nearly 60% of economists expected a September cut. Now, 66 out of 69 economists surveyed expect rates to remain unchanged. The decision comes amid ongoing political uncertainty in France and the successful negotiation of trade deals with the United States that have reduced tariff-related risks for the European economy. Major political development: tragic loss of conservative activist Charlie Kirk. The political world was shaken by the fatal shooting of Charlie Kirk, the 31-year-old conservative activist and CEO of Turning Point USA, during a university event in Utah. Kirk, a staunch Trump ally and father of two, was shot in the neck while speaking at the event. Tributes poured in from across the political spectrum. President Trump called him great and even legendary, while former President Biden condemned the violence, stating, "There is no place in our country for this kind of violence." Former President Obama also denounced the killing as despicable violence that has no place in our democracy. Israeli Prime Minister Netanyahu praised Kirk as a lion-hearted friend of Israel and lamented that a planned visit to Israel would not take place. This tragic event highlights the continuing concerns about political violence in America. Trump-Netanyahu tensions over Qatar strike. Diplomatic tensions emerged between President Trump and Israeli Prime Minister Benjamin Netanyahu following Israel's unprecedented airstrike on Hamas leaders in Qatar's capital, Doha. The operation resulted in the deaths of a Qatari security official and 5 others, though it failed to eliminate the Hamas leadership targets. Trump expressed his dissatisfaction with the strike, stating he was very unhappy about this aspect of Israeli actions. The bombing has tested the limits of the Trump-Netanyahu alliance, with Qatar strongly condemning the airstrikes as state terrorism and suspending its mediation efforts between Israel and Hamas. This situation is particularly significant because Qatar hosts the largest U.S. military installation in the Middle East, and Trump had signed a comprehensive defense agreement with the Gulf nation just 4 months earlier. Geopolitical developments, Russia, Ukraine, China. Triangle New Analysis reveals the complex dynamics shaping the ongoing conflict in Ukraine and its broader geopolitical implications. China's position has evolved from diplomatic neutrality to material support for Russia's war effort, despite historical commitments to Ukraine's territorial integrity. China has become Russia's largest oil customer, accounting for nearly 40% of Russian fossil fuel export revenue in 2025 at discounted prices. This economic dependence has effectively relegated Russia to the position of a junior partner to China, contradicting Putin's original objectives of restoring Russia's great power status. The war has also strengthened existing alliances, with recent meetings between Xi Jinping, Vladimir Putin, and North Korea's Kim Jong-un, highlighting what the European Union describes as an autocratic alliance, challenging Western interests. Trade and tariff development. President Trump's tariff policies continue to create global economic uncertainty. Recent developments include his call for the European Union to impose 100% tariffs on imports from China and India as part of a coordinated strategy to pressure Russia regarding the Ukraine war. Current U.S. tariff rates include a 50% duty on steel and aluminum imports, 25% on foreign-made vehicles, and varying rates on other goods depending on country of origin. The UK has negotiated the lowest rate at 10%, while negotiations continue with other trading partners. Cryptocurrency market surge. The digital asset market experienced significant momentum over the past 24 hours, driven by softer-than-expected inflation data and growing expectations for Federal Reserve rate cuts. Bitcoin breaks $114,000. Bitcoin surged past $114,000, representing a 2.39% increase over 24 hours, with trading volume reaching $56.3 billion. The cryptocurrency's market capitalization now stands at approximately $244 trillion, maintaining its dominance in the digital asset space. The rally was supported by massive institutional inflows, with Bitcoin spot ETFs recording one of their largest single-day inflows at around $741 million. This institutional adoption continues to validate Bitcoin's position as digital gold and a hedge against traditional financial system risks. Ethereum and altcoins. Follow Ethereum crossed the $4,400 threshold, trading at $4,347.83 with a 0.89% increase and market capitalization of $519.7 billion. The world's second-largest cryptocurrency continues to process approximately 70% of blockchain transactions, maintaining its dominance in decentralized finance applications. Other altcoins showed strong performance, with Solana, BNB, and various meme coins posting significant gains. XRP notably re-entered the Bloomberg Galaxy Crypto Index with a 14% weighting, signaling renewed institutional interest. Total market capitalization nears $4 trillion. The total cryptocurrency market capitalization approached $4 trillion, representing a 2% increase as traders position themselves ahead of key U.S. inflation data. This growth reflects increasing confidence in digital assets as both institutional and retail investors rotate into riskier assets amid expectations of easier monetary policy. Key sectors and individual stock performance. Beyond Oracle's historic surge, several sectors showed notable performance patterns. Technology sector, leadership. The technology sector led market gains, with the semiconductor industry particularly strong. NVIDIA gained 3%, while advanced micro devices surged 24% on Oracle's AI optimism spillover effects. Data center infrastructure providers also saw significant gains, with companies like Constellation Energy and Vistra rising more than 6%. Apple's continued weakness. Apple shares declined 3.2%, marking the fourth consecutive day of losses following disappointment with the iPhone 17 rollout and new product announcements. This weakness in Apple, a major Dow Jones component, contributed significantly to the Dow's underperformance relative to other major indices. Energy and commodities. Gold futures reached historic highs, climbing to $3,643.60 per troy ounce as investors sought safe haven assets amid inflation concerns and potential monetary policy shifts. The precious metals' performance reflects ongoing uncertainties about the global economic outlook and currency debasement concerns. Banking and financial services. Financial sector stocks showed mixed performance as investors weighed the implications of potential Federal Reserve rate cuts. Lower interest rates typically compress bank net interest margins, but can boost loan demand and reduce credit losses. Looking ahead, key events to watch. Several critical events in the coming days will shape market direction. Federal Reserve meeting, September 16 to 17. The Federal Open Market Committee meeting will be the week's most significant event, with markets pricing in a high probability of the first rate cut since the pandemic easing cycle began. The size of the cut, 25 or 50 basis points, will depend heavily on today's CPI data and any additional economic releases. Ongoing earnings season. While Oracle stole the spotlight, other major companies continue to report earnings. Results from Kroger and Adobe are due, providing additional insights into consumer spending patterns and enterprise software demand. Geopolitical monitoring. Continued developments in the Middle East, Ukraine conflict, and U.S.-China trade relations will require close monitoring as these factors can quickly shift market sentiment and risk appetite. Risk factors and market outlook. Despite yesterday's strong performance, several risk factors warrant attention. Valuation concerns. With the S&P 500 up 11% year-to-date and multiple indices at record highs, valuation metrics are becoming stretched. Oracle's 94% year-to-date gain exemplifies how expensive growth stocks have become, making them vulnerable to any disappointment. Geopolitical tensions. Escalating conflicts in multiple regions, from the Middle East to Eastern Europe, create ongoing uncertainty that could trigger risk-off moves in financial markets. Inflation persistence. While producer prices showed encouraging moderation, consumer inflation remains above the Federal Reserve's 2% target. Any upside surprise in today's CPI data could derail rate cut expectations and pressure equity valuations. Economic slowdown risks. Weakening employment data and mixed economic indicators suggest the U.S. economy may be losing momentum. While this supports the case for rate cuts, it also raises concerns about corporate earnings growth sustainability. Final thoughts and market perspective. Yesterday's trading session perfectly encapsulated the current market environment. Record highs driven by individual stock stories like Oracle, supported by encouraging inflation data, but occurring against a backdrop of significant geopolitical and economic uncertainties. The Oracle surge demonstrates the enormous investor appetite for artificial intelligence opportunities, but also highlights how concentrated market gains have become among a relatively small number of technology companies. This concentration creates both opportunity and risk for portfolio managers and individual investors. The Federal Reserve's upcoming decision will likely set the tone for markets through the remainder of 2025. A 25 basis point cut would signal confidence in economic resilience while addressing labor market concerns. A larger 50 basis point cut might indicate more serious economic concerns that could eventually weigh on corporate profitability. Cryptocurrency markets continue to mature, with Bitcoin's surge above $114,000 and massive ETF inflows demonstrating institutional adoption is accelerating. However, the high correlation between crypto and traditional risk assets means that any broad market correction would likely impact digital assets as well. The tragic loss of Charlie Kirk reminds us that political tensions in America remain elevated, adding another layer of uncertainty to an already complex investment environment. Meanwhile, geopolitical developments from the Middle East to Eastern Europe continue to create potential flashpoints that could rapidly alter market dynamics. For investors, the current environment requires careful balance between capitalizing on growth opportunities in areas like artificial intelligence and maintaining appropriate risk management given elevated valuations and numerous uncertainty factors. The coming weeks will likely provide crucial clarity on Federal Reserve policy direction and the sustainability of current market momentum. Disclaimer: this analysis is provided for educational and informational purposes only and should not be considered personalized investment advice. All investments carry risk, including potential loss of principal. Past performance does not guarantee future results. Market conditions can change rapidly, and investors should conduct their own research and consider consulting with qualified financial professionals before making investment decisions. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel, and let us know in the comments which company you'd like us to analyze next.